On February 27, financial policymakers from G20 countries are set to meet. If they manage to develop a common strategy, they will support risk sentiment in the markets. Meanwhile, investors need some support. After all, the US president intends to proceed with the imposing tariffs on Canada and Mexico as early as next week. The US dollar reacted to this statement with growth. Now let us find out how the macroeconomic data slated for release on February 27 could affect the market situation. You're watching Traders Calendar. It seems that European businesses are gradually overcoming pessimism. In January, the economic sentiment index rose from 93.7 points to 95.2. The preliminary figure for February is already set at 96 points. If the data meets expectations, this could be a positive factor for the euro. Markets are awaiting details from the January meeting of the European Central Bank, and this report traditionally triggers increased volatility in the currency market as it includes comments on the interest rate outlook. However, the main data flow on this day will come from the United States. First, the US will disclose its durable goods orders data. According to forecasts, the report may unveil a significant increase. Compared to the previous month's figures, are expected to rise from a minus 2.2 to plus 2.2%. A revival in the US manufacturing sector will support the strengthening of the US dollar. It's worth noting that this day is set to bring high volatility for the US dollar as data will push its exchange rate both up and down. If the industrial orders report supports an upward move, the GDP data is expected to send the currency downward. Forecasts suggest that the US economy slowed from 3.1 to 2.3% in the fourth quarter of 2024. For the Fed Reserve, this will be a signal to consider a rate cut. At the same time, the GDP price index is expected to rise from 1.9 to 2.2%. If the data matches expectations, it will indicate that inflation remains under control. And this means that the Fed Reserve may not need to rush with the rate cuts. Such a scenario would support the greenback. Markets are paying close attention to the weekly jobless claims reports amid mass deportations of immigrants and layoff of government employees in the US. Although this indicator fluctuates significantly, the overall US labor market is cooling. If the figure rises from 219,000 to 220,000, it will also confirm an economic slowdown. In this case, the US dollar will respond with the decline. However, the US dollar may recover within an hour following the pending home sales report for January. And these figures steadily increased from September to November when it showed a rise of 6.9%. However, in December, the number of pending sales plummeted to minus 5%. The forecast for January suggests a return to 6% growth. If the actual data confirms this scenario, it could signal housing market stabilization, thus supporting the greenback. Additionally, speeches from the key central bank officials are expected throughout the day, and their comments typically increase market volatility, as they may hint at future monetary policy decisions. Please note that the time of publications is set in the GMT plus 3. The next video review of Traders Calendar will be released on Thursday, February 27. We wish you profitable trading and see you soon.